Hey guys, this is Karthikeya Kantwal again from Apex FinServe. I hope you had a good trading session today. Although the expiry was pretty boring, I still hope you guys ended up in green. Now we'll be discussing the same roundup of things today as well. 5 equity scripts plus the index outlook for tomorrow for Nifty, Banknifty, both using your option chain as well as technical analysis. Now, before we start, out of the trades that we had discussed yesterday, we had two triggers, one on SRT and one on Apollo Hospital. SRT hit the target smoothly in the same candle, I guess, and Apollo Hospitals closed close to 0.5% in green. So we had a green trading session overall as per the watch list. As for my personal trading, I did not trade the expiry because honestly there was no trigger as per my analysis. So I take forced trades. So let's begin for tomorrow's trading session. Let's start the watch list. So coming to the first script, we have SRT Transfin. Now SRT, I told you guys yesterday, the up move was pretty large, so it had to have a correction. However, as we can see, the correction is roughly more than, not roughly, it is rather clearly more than 50% of the swing leg, which means that it is highly probable that instead of a deep retracement, it might turn to be a complete reversal of the phase. It might turn to formation of lower low lower highs, or might go back into the trading range. So the idea now is to take a short position at a pullback in anticipation of the phase change. So we have a short position on SRT Finance at 735 with the stop loss going at 745 and the ideal targets at 1%. Moving on to the next one, we have Apollo Hospitals. I told you guys yesterday we were going to take a sell position on it, and we did take a sell position on it. The results were as expected. However, as you can see, it has not made that much of a phase change, and it seems to be continuation of a higher high higher low formation because it has not convincingly broken a previous swing high, which should ideally have, if broken, it should have gone into further phase changes of lower low lower highs. But since that has not happened and it has acted as support, so the higher high higher low pattern is expected to be continued here instead of lower low lower highs as we were expecting yesterday. So the idea here is to take a long position near this swing low at 1385 with the stop loss going at 1370 and the ideal targets of 1% as usual. Moving on to the next one, we have IndusInd Bank. Now, IndusInd Bank, I told you guys yesterday that such a big up move is not really sustainable without a deep correction, or at least a 20-30% correction, which hasn't happened yet. So the idea now is to trade this possible structure. If you look at this, it is more or less of a distorted pennant, which is a trend following pattern. So the thing is, you cannot really trade a pennant with conviction because it is one of the lower probability patterns. So instead of trading the pennant, we are going to plan a trade in hopes that it is invalidated, it being a low probability pattern. So the idea is to sell IndusInd Bank under 550 with the stop loss going at 558. Now this is a short under 550 and not at 550. So if you are one of the conservative traders out there, then wait for confirmation or a bearish signal, engulfing on a smaller time frame or anything like that before entering a short position at 550. Even better, you can go ahead and use this SLM order type to prevent false entries. Moving on to the next one, we have PEL. Now PEL, I have been telling you guys, it seems to be running out of strength, but somehow it always makes some sort of higher high. However, that is something that has not happened today. So it has not broken the previous swing high, which honestly further cements my outlook that it has to come down. So the idea on PEL is to sell under the previous swing or the previous resistance turned support of 1440 and the stop loss going at 1455 with the ideal targets of 1%. Moving on to the next one, we have Just Dial. Just Dial, the bias has not changed at all. We still hold the exactly same trade that we had yesterday. It is a sell under 370 with the stop loss going at 375. Now furthermore, you can see it has been making same lows, which is ideally not bearish, but the thing here is it has been making lower highs. So if you consider the swing high to be at this point, and you assume that this is a lower low lower high formation in making the trend is in continuation, then this is a form of a descending triangle at this point if you consider the movement from here to here. which is, if you draw a trend line, it makes a base and lower highs basically. So the idea is to trade the breakout of this pattern, but to be on the safer side, we are considering a level even under the wicks which end at 371. So we are going to be selling just dial only under 370, with the stop loss being at 375 and the ideal targets at 1% from your point of entry. This is all that we had for equity. Now moving on to the indices segment. Now for indices, starting with Nifty, the charts, we still have the exact same chart, the exact same Fibonacci level that we have been using since I think 3 or 4 days now. Now the thing here is, I told you guys 10,800 is acting as resistance, and it's still acting like that. However, the last candle has strongly pierced that, and it has managed to close above that level. The thing is, we need to check tomorrow whether that is being sustained or not. If it is being sustained, then definitely the gates are open for 11,000. However, if it is not being sustained, then it might come back down to fill the gap. Now keep in mind that this is a very important 100-point range for Nifty, from 10,830 to 10,700, 130 points. Whichever side breaks out on Nifty is going to be the decisive thing for the short-term trend for a couple of days, or even until the next weekly expiry for this particular index. So if it breaks on the upside, we might see 11,100. If it breaks on the downside, we might as well observe these gaps being filled from 10,600 to 10,650, and even more so, we might even see this gap being filled from 10,450 to 10,480, because the gaps have to be filled someday, might as well be filled pretty soon. Now when we go to the option chain for Nifty, option chain, I have been telling you guys again and again, the fresh option chain just after the expiry ends is pretty dry. So I don't really give it a lot of weightage, because a lot of participants are yet to enter. So I have changed the expiry date to 16th of July obviously. But when we look at the option chain and compare it with the relative volume and open interest that we generally have on Nifty, it's still pretty dry. It is roughly half, or 60% of the participants. The rest 40 are still yet to come. However, getting our 4 regular levels, we have immediate resistance at 10,900 with 358,000 added contracts and 791,000 total open interest, and 11,000 as your significant point of resistance with 740,000 added open interest and 1.3 million total standing open interest. Now this is important because if you compare both the total and the change is roughly 50% of the standing open interest, which means it has almost doubled. So that is a significant change. When we look at the support side of things, we have immediate support at 10,800 with added 1 million open interest. So that is pretty strong. Again, comparing with the total open interest, which is just 1.3 million, that is more than twice the addition of the earlier standing open interest. For your significant level of support, we have 10,700 with 701 added open interest and 1.1 million total standing open interest. However, when we look at the PCR paints a complete different picture altogether. The thing is, this is the PCR volume and not the PCR of open interest. So the PCR volume paints a picture of the option buyer's perspective, not the option writer's perspective. The PCR for volume of Nifty comes to be around 1.01. Now anything for PCR of volume above 1 is considered to be in the proper bearish territory. But when we look at the PCR in conjunction with the added open interest on the put side, it paints a very conflicting picture, because 1 million added open interest on a somewhat at the money strike price signifies that the put writers are pretty sure-footed at this point of time. And when we compare it with the relative small change in open interest on the call side, so the call writers are not really that certain. Now let's see what happens tomorrow. Now, personally, I would not pay that much of an importance for the open interest for tomorrow, since it is a fresh expiry, as I already explained. Now moving on to the next index, Banknifty. Now Banknifty, as usual, we have our levels. For the Banknifty, we have a similar situation here. The range break from 22,750 to 23,000 is going to paint the short-term coming trend for Banknifty. If it does break on the downside, it might go all the way down to 22,300, 22,400. If it breaks on the upside, it might even go to 23,500. When we check it through PCR, we have somewhat of a similar range being formed. The the immediate resistance coming at 23,000 with 179,000 added open interest, and significant resistance coming at 23,500 with 100,000 added open interest. On the support side of things, we have immediate support at 22,800, which is more or less close to our 22,700 lower range definition, with added 49,000 contracts, and the important support going at 22,500 with 118,000 added open interest. Now when we check it out with the PCR again for Bank Nifty, it comes out to be PCR volume, it comes out to be 0.93, which is, in if not proper, it is definitely mildly bearish. So the PCR, the option buyers for both the indices are still bearish. I don't know why, what cues they are getting. I am not exactly aware of that, because there is definitely no strongly bearish position or strong bearish signal indicator in the chart for me right now. So I don't know the exact reason for their stance. However, this is what it is. Now for tomorrow, I would advise any one of you who is trading indices, focus more on your technical analysis rather than the dynamic change in open interest, because the maximum participation is yet to happen. So don't be overly reliant on that, especially for Fridays. Now, this is all that we had to discuss for tomorrow's trading session. Now, I have one thing to ask from you guys. We are considering what videos to upload over the weekend. So if you have any suggestions or any topics that you would like for us to cover in the coming videos, any explanation or anything as such, even from our own analysis, be sure to mention it down in the comments so that we can have a look at it, and if possible, make a video on it and upload it this coming weekend. I hope you have a good green trading session tomorrow. As usual, if you like the content that we have been posting, please do like, share, comment and subscribe, and don't forget to click the bell notification icon. And as I keep on telling you guys, if you want any of these charts, if you want this option chain analysis, you can always check out the Telegram channel @ApexFinServe, where everything, all of this along with the trades and everything is posted every day before 9 a.m. before the market opens basically. This is all guys. Thank you so much for watching. Have a good night. Bye.